All right, guys, welcome to another live stream. I actually went live yesterday. I did this video yesterday, and it was titled 10 AI stocks that are overbought. And I got it from a website. And I think that website was either had some malware or something because it just kept coming up with like all these commercials and all these ads and things like that. And then it was like pulling my Google account and showing my email. So I didn't want to show my email, so I just deleted the video. It was like 33 minutes long. So I'm just going to do the video over today, but I'm only going to go over 5. Yesterday was 10. So, and what I did was I'm not going to pull up the website because I don't want it to happen again. So I just wrote down 5 AI, or what they considered AI stocks on their list, and we'll go over those. We'll go over the charts to see if they're actually overbought. Now, for me, when I think of, or if I'm thinking that a stock is overbought, I typically look at the chart. I think the chart gives you the best picture because you could see, if something's overextended. Now, is it a definite thing? Looking at the chart, you're going to know exactly what's going on? No, but it's definitely it helps if you know how to look at a chart and determine whether something's overextended, because nothing goes up in a straight line. Nothing goes straight down for too long. There's always some type of correction, whether it's to the upside or the downside. If it's on the downside, it's some consolidation, some support, or if it's shooting straight up, there's some type of resistance. Or if it's up to 300%, most likely you'll see a decent sized correction pretty soon. All right. So we're going to go over the list. The first one that they had on the list was Tesla. Now, obviously Tesla is an EV play, but it is for me, it's an AI play as well, because all the stuff that they have configured in their car, I think it's a lot of it's AI driven. So yeah, let's pull that up. Let me share my screen. And let's look at Tesla. Let's look at the chart. And they had some reasoning behind it, but we'll just look at the chart and we'll just talk about it and see whether we think Tesla is overbought. All right. So if we look at the chart, I'm going to go over it this way. All right, cool. Yeah, if we look at the chart from 2020, it ran up from 27, and I think they did a stock split as well. So, these were probably not the exact numbers back then, but in 2020, we'll just go over the numbers, use the numbers that are on the chart. It was trading for 22, and it shot all the way up to 258. So that was a 10x on your money, and right now, it's sitting at a 631 billion market valuation. So back then, it was probably close to $1 trillion. I think it was at $1 trillion. I remember Tesla being at $1 trillion at one point, or at least close to that. And yeah, so it ran up 10x, and from there, we saw a decent sized crash from 382 to 130. So about 2x of that, 2 to 3x of that lost. And from there, we're seeing a consolidation period. So for me, looking at the chart, I don't think it's overbought. I'm not sure what the article was going off of. I think they said, okay, yeah, now I remember what they said. They were saying that its PE ratio and the RSI were showing that they were basically overbought or overvalued. So the PE ratio basically tells you whether the stock is overvalued or undervalued. and the RSI tells you whether it was overbought or oversold. So for Tesla, it was showing that it was overbought for the RSI, and then the PE ratio was showing that it was overvalued in the future. So yeah, but looking at the chart, I think it could definitely have a run up to the 300s, and specifically because we are going to see interest rates cuts coming soon, whether that's in September or close to the end of the year. We are going to see interest rate cuts, and that's going to have an effect, especially on technology companies. That's going to make them run up. So I think Tesla will at least see Tesla at 250, or maybe even retest this high before it's considered overbought. That's just my opinion. I mean, we could see a downturn to 123. I just don't see that happening because we we have so many bullish catalysts coming up. We have the even though the election is not a catalyst, it's still a news event that usually sparks a increase in asset prices because they want the market to look good going into an election. And then also, again, the interest rate cuts, that's very positive, especially for growth stocks like Tesla. And it's sitting at 631 billion. We have all these new stocks, like I wouldn't say new, but we have a lot of stocks that are breaking that trillion-dollar barrier, that multi-trillion-dollar barrier. So it's just becoming very common for stocks to be valued in the trillions. And Tesla's the number one EV company. So, yeah, I don't think it's overbought. But yeah, let's move on to the next one. The next one they had on the list was weird to me. They had Netflix. Netflix is not an AI stock, at least from what I know. I haven't really kept up with what Netflix has been doing. I'm not sure if they added some type of AI functionality in their app, or I'm not sure, but I don't think it's an AI stock. It's on the NASDAQ, so I guess, technology services, communication services, entertainment. Yeah. For me, I actually do think this is overbought. It went from 198 to 674. And like I said in the one that I deleted yesterday, the live stream, I got rid of my Netflix account. And that's because I don't really use it. I feel like everything that you want, you can get on the internet. You could get on YouTube. You can, you get on Twitter. They have video clips and stuff like that. But mainly you use YouTube for free. So, yeah, obviously you have some shows where if you want to watch it all the way through, Netflix is probably the go-to. But for the most part, I think where Netflix is winning is like they were the first to do this type of, or one of the first to do this type of streaming service where you can stream, pay $10, and you have access to all these movies. It was kind of like the downfall of Blockbuster. So I feel like they're the McDonald's of this streaming services because you do have competitors. You do have Hulu, you do have Disney, you have ESPN has their own stuff, and I'm pretty sure there's some others. But yeah, Netflix is kind of like the McDonald's of the streaming services. Like entertainment, TV shows, movies, and things like that. So yeah, I think they make their money off of, old customers that just never, they're like, it's $15 a month. They probably have it for people that come over, or maybe they still do watch shows. I'm not sure how good their catalog is. I remember when I was signed up for Netflix, they didn't have a lot of the stuff that I wanted to watch, or if they did, it was very limited. And it was like you had to get a Hulu account to get certain shows and things like that. But again, I really don't watch shows like that, so for me, it didn't make any sense to have it. But I think a lot of their revenue comes from people that just think like, oh, I might as well just keep the Netflix. It's almost like electricity or water bill or something like that. It's kind of one of those. I would consider it like a utility. People almost keep their Netflix because they think of it just like as a standard bill that everybody should have. So that way they they can either entertain guests or entertain themselves when they don't have anything better to do. And most people don't have cable anymore either. So yeah, I think that's why they're still in business, but there's a lot of competitors. But looking at the chart, it does look overbought. It does, and from me saying all that, I do agree with this uh, with this conclusion that it's overbought, because for me their revenue model has not really changed. They haven't done anything to separate themselves from like a Hulu or a Disney or anything like that. And a lot of this stuff is like licensed. They have to get a lot of licenses, so they don't really have like I said, the only competitive advantage that they have is that they came out first and they have a lot of like a loyal customer base. That's my opinion, but I don't think it's an AI stock, so I'm not sure why it was on the list, but I do think it's overbought. So yeah, that's number two. All right, so number three was Broadcom. All right, let's look at the overall. And so this company, Broadcom, I think it's a competitor to Nvidia. It's a semiconductor. They make custom chips. It's a $1,600 stock, $747 billion market valuation. And they recently said that they're going to do a 10-for-1 stock split, so similar to Nvidia. So psychologically, I think if the AI narrative, which I think is continue to run hot, I think this is going to still run up, especially when they do this their stock split. It's just going to look psychologically a lot cheaper. People are going to want to get into this stock because it's just cheaper to get into. And again, like a lot, we're getting into that era where companies are valued at trillion-dollar valuations, multi-trillion-dollar valuations, and this is sitting at 747. So I could definitely see it at 1.4. And looking at the chart, though, it does look a little bit overextended. It does look like it has some healthy pullback. So if you look at the chart, usually you don't like the, you'll see it in the NVIDIA chart. It's a little more straight up. But this looked like it has some gradual, like a gradual increase, and then some, little dips here, which are very healthy for the chart. So, yeah. But, I think after the stock split, it'll probably run a little bit like NVIDIA did. But for the most part, I could see it in the middle, overbought, maybe not oversold, but not too overbought, but it's getting close to that point. I think when it gets to $1 trillion, it might sell off a little bit, and then you might see a correction, maybe down to, well, it'll be at 160, 150 when it does this stock split, so maybe down to $180 area. All right, so that's the third one. Google was on the list as well. Google, I wouldn't say Google. Google, yeah, Google. I guess Google. You could consider Google AI. They're implementing AI stuff, but they're not a pure AI company. You're seeing like a lot of these companies like Amazon, Google, Meta. They have to implement AI stuff, their own AI bots, their own Chat GPT, and their own they're implementing AI software so they could keep up with the markets, right? Because they don't want to be left behind. But I don't consider these AI. But since they are implementing AI stuff and they're like blue chip stocks, I guess that's why they consider that stuff. So I looked it up on ChatGPT. It says Google's AI chatbot is called Bard. It was introduced to compete with other conversational AI systems like OpenAI's ChatGPT. Bard leverage Google's powerful language models to assist users in various conversational tasks. And the reason why a lot of these blue chip companies are able to transition or add AI to their services is because they have a lot of data, a lot of information. So their chatbots, their data, their whatever their AI services is, they can offer a lot of information because they have a lot of information on the customer. So, and again, Google is basically YouTube too. So they do have a lot of information. All right, so if we look at the chart, and they did a stock split too, because I think Google was trading at like close to $3,000. So, and I'm not sure if it was a 20 for one or 10 for one, but most likely was probably around here, and it doubled in price. Again, it's a $2.2 trillion company. It just looks, when they did the stock split, it just made the stock psychologically look a lot more cheaper, and people were able to buy into Google. I mean, that's what stock splits do. It doesn't do anything to the valuation, but psychologically, it makes people say, okay, well, this looks a lot cheaper. I'm able to buy a whole share. When it was sitting at 2,500, 3,000, a lot of people wasn't able to buy a whole share. Now they can. And again, they do have fractional shares, but again, most people don't like fractional shares. In the crypto space, it's a lot. Like if you had a fraction of a Bitcoin, that's a lot different. I don't know. I just think that since you're able to hold the crypto yourself, having half a share is not bad. A bad thing. It's decentralized. You can own your own currency, like hold it yourself. But with stocks, since you have to have it on a platform, fractional shares, I don't know. Since they came out with fractional shares, I never really liked it for stocks since it's not really decentralized. So I'd rather just own a whole share. I don't know. I think people feel the same way. So when you see a stock split for a big company like Google, that's when people come in, and it was probably done right around here because you see the run up. I mean, it almost did a 3x after the stock split. So is it overbought? It's a $2.2 trillion company. It has gone up for a while, so maybe a correction is close by. But again, Google is a blue chip company, so I could see it staying around for a little bit longer. I mean, not staying around for a little bit longer. It'll be around long for a while, but as far as going up, I could see it going up for a little bit longer, then maybe another correction, depending on how the AI movement goes. All right, so we went over NVIDIA, Broadcom, Netflix, Google. The last one is Meta. Meta, Facebook. And they just did a stock split too, I think, recently. Or maybe they didn't. I'm not sure if they did. Yeah, so they look like they ran up. And again, so Meta has their own stuff too. I think it's called, I looked it up too on ChatGPT. Okay, yeah, so Meta has the JAMA or Llama large language model, Meta AI. So that's their AI software. And it went up from 88 to 500. So yeah, I think Meta's overextended. It's 1.2 trillion, but again, we're getting those multi-trillion-dollar valuations. If Meta can do something in the AI space that most people adopt, if JAMA is the go-to language or AI bot that people use or service that people use, then I could see it at 2 trillion. Maybe it goes to 1,000. Again, multi-trillion-dollar valuations are becoming the normal. So if you haven't seen my last, I don't know if it was my last live stream or the stream before that, I was saying how you need to keep up with market cap and make sure that you understand that the market caps valuations are changing. So it's normal now to see a multi-trillion-dollar market cap. Before, this was like unheard of, right? The whole markets themselves were like a multi-trillion. Now you're getting one company that's worth over $1 trillion. But I do think it is a little bit overextended. So maybe we do have a correction down to the last support level was like 357. But again, you're going to need some negative news to do that. For all the five that I show, if it does have a correction, you're going to need some negative news. So maybe it's like an earnings. They didn't meet expectations, or maybe they did good, but it wasn't what they were expecting. And they come down and they correct to the last support level, something like that. But I don't think it's going to be anything huge. It's over $1 trillion. They're a blue chip company, and AI is here to stay, right? Okay. Let me. Let me get rid of this FaceTime. Okay. Yeah. Yeah, that's pretty much it. There was 10 on the list. I'm trying to think if I could think of the other five. No, I can't. It was I just did the five. I didn't want to go over the 10. And one of those Netflix, I'm not even sure why they considered it an AI stock. I don't think it's an AI stock. I'm not sure if Netflix is coming out with something that I didn't know about, or maybe let's ask ChatGPT. Is Netflix getting into AI? Yes, Netflix is actively integrating AI into its very aspect of its business. The company uses AI machine learning for personalized content recommendations, optimizing streaming quality, and improving content creation. Netflix AI-driven personalization analyzes user preferences and viewing habits. Okay, so they're using AI to personalize people's content that's recommended to them on their page. So I guess like favorites and stuff like that. But I feel like Instagram, then almost every company could then be called an AI company, because I feel like every company is doing this. Optimizing streaming quality. So I'm not sure if that's going to be like pulling GPU power from different cloud services or something like that. I'm not sure. There's some AI stuff with that. But yeah, okay. So overall, AI is a crucial component of Netflix strategy to maintain its competitive edge and deliver superior user experience. So it's not AI in your face, but it's like AI in the back end. So yeah. But overall, I don't think Netflix is a AI company, but it's they're going to be using AI to better their business. All right, that's pretty much it. I'll let you guys go, and I'll see you guys in the next one. Take care.